Welcome to TradeTheNBI.com. This is John. This reports for the 29th, and as we near the month end, so we had the brief what we were looking at with the reset of the steel DOC spread separation, where we got a pretty decent decline, came through a little bit of a dip below the red line, but we also got completely oversold here at the same time, which is very interesting because we're really not that far off the highs and no longer any talk about overbought in any way, shape, or form. Of course, some people will talk about valuations, but not really relevant. The real question mark is going to be now this pathogen question of the coronavirus. How much impact economically will it have? It's not necessarily the disease as much as the panic. And particularly when it comes to markets, they know how to panic the best. So that's the only unknown right there. If we have witnesses voted for the impeachment situation, that could alter some stuff, though. The case looks pretty good for the president right now, at least from the standpoint of the Republicans controlling it. So that's what the market has been betting on, that there isn't any upset in the apple cart. But should something like that change, there would be a mass exodus because frankly, the policies enacted have been exactly what the market has wanted, not to mention the Fed. In these last 4 months, really, they've been active in pumping huge amounts of liquidity into the repo market. And that's something we talked about a while back when it was taking place. And it just adds this systemic risk, but this is no different than right after the financial collapse when the Fed got involved heavily, and now you have an election year, and that is certainly going to be added pressure because you know that they're going to be like screaming at them to help support the re-election bid, and Trump is not shy about voicing his opinion. From a NASDAQ standpoint, it was always looking better. It was a much stronger position than the S&P in general. Barely dipped below in the negative shakeout. And we'll see if it's able to return positive because, again, a lot of times is what you have with the short situation. The initial sell, people see value in that. It comes back up. It's got to take out the high. The problem is, will it have another lower shakeout? Then we'll be looking at 3 lower shakeouts. And equivalently, what people will probably end up calling a double top soon. And that's when things get interesting. From a Euro, Brit exit, or the pretend Brit exit, has arrived, and this is basically you've cut a huge amount of GDP out of the European Union from a technical standpoint. So it's going to be interesting to see if they're going to be able to hold this up. This puts downside pressure on the S&P the closer the euro gets to parity. So we'll also keep an eye on that. The stabilization in oil, that's critical because that is the real catalyst. And everyone's going to be watching now with China and the demand issue with their country basically coming to a halt in the near future here, maybe another week or so out, as we see case multiplication exponential. And depending on what you believe, I mean, there's some reports saying as many as 90,000 infected. Those are unconfirmed ones. The official ones went from 2 days ago at like 4,000 over 50-some hundred cases in the official report. That's starting to amplify an R-naught that we would expect to see. And again, not really worried about, I mean, as sad as the 4% death rate that they're at is bad enough. When you're talking about expanding, the question really becomes the fear factor. And does it shut down global growth? And that's something you want to be paying attention to, regardless of whether it's in your town or not. Though I think in Italy they just reported some cases, or at least they're checking for some migrants who were in China. And this is the fear element of it, where it becomes you're just doing things because you're scared. And that's problematic because when fear takes place, just like in the election we were talking about, people's behaviors change and they tend to hold back. And it's the holding back that can have a huge impact on a commerce-based economy. So that's really what we're paying attention to. And you still have the hyperinflation of gold with the whole Iraq situation still uneasy. They're still trying to provoke some type of armed conflict. So far, Trump hasn't been drawn into it, but they're still trying. It's amazing. They really want some kind of response, and they're not getting it. So I think it just seems like it's making them more frustrated. Beautiful intraday stuff. I mean, we had that long riding. We talked about this was beautiful. All these positive extremes on the super hype. That's what I was talking about. And see, this is where you get those little unique situations where you can deviate slightly from what we look for from a normal protocol. Cyan below red, always about, of course. When you're peeking out and you got your cyan in there, I look for that steel cross below cyan. That's going to be your earliest weakness point. And sure enough, that produces the first weakness. But in this particular case, as soon as we got cyan over green, you had gold starting to roll over at that point. To me, that's an early opportunity to jump in because I'm so close to the 100% that if this just bounces around, because sometimes these can just go sideways for 6, 8, 10 bars, and they play right around the highs, more like what this did over here. But in this case, it did fill, and that's the beauty of having those targets, because you could just go straight to the positive extreme right there, and boom, 3250 right at it, and that's exactly where it filled right back into. And then the overdraft, where this is where you see how much supply actually exists out there, and that's always a critical one to see how much downdraft, because sometimes you get a swift downdraft that pops back up, which means it just stops. But here there was a little bit more before it could build back up into, and this was why it was even I would cover on the dip and everything, but not really was committed to a long until you get that green crossover, because again, this really wasn't producing much from a red DOC standpoint. And then it just kind of went sideways for quite a while until we ended up with a nice oversold. I was a little suspect on this one too, because again, unlike this one where you had the nice orange dip, which meant you could have been into 38 or earlier before even that cross. This one didn't have the orange dip, so I was really like, well, is this even going to survive, or are we just going to break down below? But we stayed above that 3250 and then got the green over, and there's not much you can do once you see that green going over. You know that it's turnaround situation potential, and sure enough, that's exactly what happened, and boom, they drove it all the way back up to the highs. Look at how much, that's a lot of volume there. I mean, you see how shrunk this chart is, because normally I don't run it that small. Normally we're right around this size so that you can see what's going on, but any of the little DOC blips here all had the same reset. This is exactly what we're seeing now. Dip below the red line, so sure enough, we came back, filled it back in a little bit later on. That's why I love looking at those, because when I'm up at these, I get the key point. I don't necessarily have to get freaked out when there's a little bit of movement, because I still have strong probability that I'm going to get my full amount. And some people say, yeah, but why not just take the smaller amount? The problem you have is with profit factor. You shortchange your profits on the return aspect of it, and you're going to end up on the wrong side of your equity growth. You've got to reach your full targets based on your risk profile. So if you're only risking a point or two up to the highs, fine, that's great. Then taking a smaller gain is proportional to it, as long as you're better than at least a 1.2 on the profit to expected loss. Because if you don't maintain that or better, which I think that when you're doing short-term trading in particular, you've got to be really strong, close to the at least 1.5 range to be effective with it, because the tendency is to want to jump around with every blip. But that's where looking at the 50K and then moving into your intraday chart really makes a difference, because you've got to stick and let those winners run, even if it takes a long time. Sometimes it's horrible. Sometimes you get good gain and comes back up to flat or zero, and it can turn. But if you don't take those full runs, the same with the long runs, this is where that 50K power mo is important to follow along with, because it captures those big runs, and that's where the outside gains are made, as opposed to constantly those that want to jump in and out every half second. So that's the long and the short of it for now. Again, I'll put stuff up on the Skype chat. I know that on the Skype chat we've been playing with a little program that you can run for scans, and I may actually create something in between. I'm going to be doing the month-end updates, because there was a couple of add-ons I was going to do to daily. I was trying to come up with an appropriate name for it. Simply looking for situations where we have cyan under red already and dips below the negative 13.5. It's sort of an oversold situation that always gets a nice bounce back after. And I was going to add that one into our milieu, because it's a very profitable short-term trade, and I've also been working with one that is more of a trend-following daily. That will give a longer hold aspect with trades to capture bigger length runs. It's not something that we couldn't do already, particularly when you have a cyan under red. There's nothing to do in those situations, and then flipping once it changes. And even if you look at it from the daily standpoint, having flipped at that point over here, you'd still be on the plus side of a short setup. So this is where longs and shorts within a nice market, a normal market, can do well, because there's always a mean reversion where you're going back and forth. But as always, I will update you with anything special on the Skype chat. Trade well.